2025's most head-spinning stock turnaround might just be in a place nobody expected: real estate. Opendoor Technologies, a company that tried to reinvent home selling, is up almost 300% year to date. But as usual, if you zoom in, things get a little complicated. On the surface, the comeback looks epic, but there's a heated debate humming around the rally. Is this a true turnaround story or a setup for another crash landing? Let's talk about the numbers. Revenue in 2023, Opendoor pulled in almost $7 billion, but that shrank to $5.2 billion last year, which was a brutal drop. High mortgage rates and shaky confidence still haunt the industry today. The market is betting those troubles are temporary. Opendoor now trades at only about 0.35 times forward sales, a discount to the rest of the sector. But if revenue never bounces toward $10 to $12 billion, the math falls apart. At that point, analysts say a stock repricing to $3 isn't just possible, it might be likely. Meanwhile, there's a lot going on in the boardroom. Kiefer Bose and Eric Wu, co-founders who helped launch the iBuying craze, are back in charge, with Rabose as chairman. They're reloading with $40 million in new capital, trying to steer the company out of rough waters. The new CEO, Kaz Najijan, is fresh out of Shopify and aiming to cut costs and speed up operations. But here's what makes this stock story wild: the short squeeze. Short sellers, those betting against Opendoor, held over 25% of its public float. As the price spiked, some were forced to buy back in to avoid even bigger losses. That only poured gas on the fire, compounding the rally. Retail traders on social media love it. Analysts, not so convinced. So what happens here? If the housing market recovers, Opendoor's high-risk bet could reward believers. But if sales stay sluggish or the rally fizzles out, the same volatility that made traders rich could slam the door on profits fast.